Good day, traders. The 4-step method to high performance trading and the free audio program, the 7-step daily routine for high performance traders, are both free downloads to help you develop the skill set, the mindset, the discipline to master the markets. The link is down below in the box, the description box. They're both free downloads. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading, and we have had a massive pre-Thanksgiving week heading into Thanksgiving Thursday in the United States. And again, wishing all my colleagues and friends and fellow traders a happy Thanksgiving. It's a fantastic holiday, probably the best holiday of the year, I think, in America. But Thanksgiving week traditionally is opportunities galore. A lot of funds, stock markets, a lot of penny stock pumping. They try to pump things up and close their books towards the end of the year with lots of profits, but typically it tends to be an interesting and potentially profitable week to trade. As I mentioned, we could see the markets go quite docile tomorrow and maybe right into the weekend. But next week we could see a continuation of a lot of explosive moves. Today I thought we had textbook 3-day setups on several markets, and just highlighting the same repeatable patterns. We had first red day on the Canadian dollar, Swiss franc, and Japanese yen trade setups today. Pump up day on Monday, first red day on Tuesday, and then the sell high rectangles, high of the day sell setups on day 3. All subtle different variations, and the Canadian dollar went vertical into the collapse from yesterday's first red day peak, and Swiss franc and Japanese yen both gave nice consolidation rectangles for perfect blow-off moves, measured moves from the rectangle. Perfect opportunity to print off your screenshots and look at those charts, because we'll look at those today. Day 1 was the pump. We had the first red day on Tuesday, first day down closing after the pump day, and then the 3 peak push into the high before the engulfment and collapse in the U.S. window. That's a 3-session setup on first red day trade, and it's fantastic. This was probably the most difficult of the 3. It's the reverse half Batman. If we look at the Swiss franc, what I really like to look for is the narrow consolidation. Now we can see the previous day's breakout level acted as the peak high for the session heading into the gap time just prior to the U.S. window. And obviously they micro-M. This is a 15-minute chart, but we had our pump-up day. Keep talking about front-side, backside, the pump-up day, and then the backside of that move collapse and closes as a first red day. Now potentially on the backside of that move, we get a 3-session setup. We break down through the low of the day and make a lower low, which becomes our anchor point in the London session. Now that lower low becomes the anchor point for the pump and dump right up into the high of the day, the breakout level from yesterday's shorts, before collapsing and breaking down. So the hour prior to the New York session is the beginning of the new 4-hour cycle on currencies. Commodities, oil indexes, gold have a 1-hour window where they start later. So their 4-hour chart time is an hour later, whereas the currencies, that 7 a.m. New York time, can often be an opportunity for positioning yourself into a great setup at the high of the day or low of the day. So we had pump up first red day, and then the trade back up into the first red day collapse for the vertical explosive move. Now, again, an example, we have the high and the low of a full range expansion, almost 2 full expansions. We may see that come into completion next trading day or next week. But in this particular case, tomorrow's Thanksgiving. If you haven't taken the money off, I would have locked that in and gotten off the screen. The Japanese yen was also a textbook perfect. First red day, we had the ramped up pump up on Monday. We had our collapse consolidation on day 2, Tuesday, to give us our first red day. And the Japanese yen was textbook perfect. First red day, consolidation 3-session setup for a sizable, scalable, rinse and repeat first red day trade setup. This was absolutely perfect. I don't think you can get it any better than that. This was, again, another example of a measured move. We can take the low and the high and just do a full range expansion with that range. 2 full expansions of the range, 0 heat, a no stress trade, over and done with in a couple of hours, but you're well, truly into the money. This is a textbook perfect, best candidate first red day trade. And we had what I would probably consider a cup and saucer, a rounding bottom pattern, whatever that may be, doesn't matter, on the British pound. But we had day 1 down, and Friday formed the high. I know Thursday was a bit higher, but they rolled up and came down. And for our 3-day setup, Friday, Monday, Tuesday, we were back inside on Tuesday. And you've heard me say, when a market goes sideways without taking out the high or the low, it's getting prepared for an explosive move. We were inside of the high from last week. I'm using Friday's high. I know the high of the week was up on Thursday, but because we had the 3 peaks, and that formed my thesis for this rounding bottom, and then we had a rising wedge pattern. You know, it doesn't matter technically, but I look at this whole thing as a geometrical range now. And this potentially could still be well on its way to going 2 full expansions. I have no idea, not a prediction, just using simple classical charting. And even the wedge itself, if we took the high and the low point, we got 3 full expansions today from that breakout of that rising wedge pattern. Trend trade all the way. The pound just exploded, and front side, no interest whatsoever in ever counter trending a market that's come out of a breakout like this. But again, I just reinforce the importance of studying the classical charting patterns. And if you're not following Peter Brandt, to do so and read his books. Just a master craftsman, and the information that you can glean from that, and just studying his charts, just the outside geometry, and learning to identify these opportunities when they present. I know that there's several traders who like to trade the pound in the London session, and we'll be talking a bit more about that, but just tremendous opportunities the last couple of days on these markets. The euro is a somewhat different sort of pattern. We had first green day yesterday. We had the dump coming down from Friday into Monday, the dump first, then the first green day reversal, which gives us the buy low opportunity today in the Europe-London window. And again, noticing just the rounding pattern, the dump and pump, day 1, day 2, day 3 for the explosive move back through the high of last Friday. And not trying to counter trend a market that now is potentially on the front side of its move. So we're looking at a market that's trending. I don't know what this is going to do, but just in terms of following the process, again, an opportunity for traders in the London window for a first green day buy low opportunity on the euro. West Texas spot crude. This market never disappoints to deliver. It gave an explosive vertical move on Monday, day 1, taking out the low of the month, and then coming back within the hour and closing at the end of the day as a first green day. Explosive opportunities in both directions. Yesterday was a buy low setup, 3 pushes into a high peak formation that locked in the high before going into consolidation. Now that's a day 3 potential opportunity that gave traders in the London window an amazing high of the day short trade with a perfectly defined geometric structure for 3 full expansions of the range. And you'll notice that third full expansion comes back to the low of the previous week. So traders that may have been chasing this down towards the low of the month, and I still may get there, I have no idea. But the US session had traders shorting down low, and a bit of volatility after that explosive move from the London session. But again, day 1, day 2, locked in the high, trade back up into the high, day 3, high of the week, high of the day, high of the session, trade opportunity in oil for somewhere in the area of 400 pips, 350. Just an incredible opportunity today in London session for oil. Indexes, similar, all three of them. We had the dump into Friday's low, came down again on Monday, trapping traders down low, shorting day 1, day 2, day 3, reversal, first green day on Tuesday, and then the buy low set up after first green day for the open into the markets and the retest and pullback with the Fed, the explosive move back to the high of the day. Not to say the Fed obviously not getting in front of it or anything else, but we just had the dump pattern. They came back down. They kept shorting it into the low. This is a dead giveaway. They came back down into it on day 2 before breaking structure out of our smaller rectangle. And that measured move on this index potentially could take us somewhere up into that 4,400 area, 4040. Not sure if it'll get there. No, we're not too far off, but again, just a geometric structure, high-low, measured move, and even the breakout of yesterday's range. If we just go high-low, we've hit almost 3 full expansions. That third expansion takes us roughly up to that same level. NASDAQ, similar. We had the dump Friday, dump lower on Monday, and then the buy low reversal on Tuesday, first green day, taking out and closing at the high of the day, taking out the lower structures, the lower highs. First green day is after we get the dump, we want the market to close back as an up day after putting peak formation lows in place. That gave traders the buy low opportunity. We had a nice consolidation. They broke out 3 pushes similar to oil yesterday for the explosive vertical move back through the high of Friday. The pullback into the breakout traders who went long, and then the Fed, the explosive move back up towards the high of the day, high of the week. Again, next week, hard to say what will happen. We had a high-low Monday, Tuesday. Range expansion takes us somewhere up to that 927 area. Again, these are just sort of levels that I look at. We have a breakout of Monday's range. We could see a full expansion up to that level. First green day yesterday. Dow, slightly different. We had a high-low range from last week that we had the false break on Thursday that came back up inside of our inside bar breakout. We talked about that. Wednesday was an inside bar. They came back and stopped out inside bar traders that were triggered on Thursday's break of the low. Came back up and went into consolidation. That's the telltale rectangle for a measured move from an explosive move up. We should see a full expansion of that high-low. Now, not sure if we'll get there or not, but we currently are in process. Definitely have done 2 full expansions of our high-low rectangle, of that middle rectangle almost, not to quite the second full expansion, but definitely still on the front side of our move up. Interesting times. Indexes are moving higher, but for how long, and are they being moved up legitimately or are they being manipulated? Euro yen was textbook pump and dump. We had our pump day on Monday, and then we had our 3 peaks inside. That's the day 2. The day 2, 3 peaks inside, and you've heard me say this, we get 3 peaks. That can create order flow for a day 3 or an inside bar and then a reversal day later. So that drops down and breaks structure on the inside. We can even draw this up. We see a break in structure. We get our Batman, the 2 ears in the middle head before breaking down on top of the previous day's high. So we had all prior to the U.S. session. This is in that hour prior to the U.S. window, that new 4-hour candle. We got our Batman in place, and we just have a complete collapse from breakout traders being triggered long at the high of the day, going down to the low of the day vertically, over, done and dusted, a day 3 pump and dump on the euro yen. Gold was interesting today. We had the dump begin on Friday, so we have trap volume up above the high of the day that breaks down on Friday. Monday continues that dump on the front side, breaks structure, break retest, and then we had an inside day yesterday. The inside day made a higher high back into the breakout level low. So hitting stops on shorts that were short at the low of the day, but also breaking structure on the inside. So we have a break in structure. This could potentially form a massive W. Now what's interesting is that they not only anticipated a potential short squeeze because of the inside bar. Right away they triggered the inside bar at the beginning of the Asian session. We had inside bar traders short. We had a break in structure on the day itself, which is textbook for a 3-push pattern short squeeze for an explosive move. But they surprised everybody by 3-pushing and pinning way down and popping up, and the retest comes down. If we just go to a smaller time frame, you'll notice after our large pin and whipsaw, the retest comes down right into the low of the inside bar. So if inside bar traders are in the market, they don't let them out. They pull right back right away. The low of Monday before trading back up. So after a volatile wick like that, the process for me is always just redraw your highs and your lows. If you're looking for some sort of thesis, redraw your highs and your lows. You get a consolidation. We had news candle at 9:45 US time, 9:45 a.m., which went vertical. So a little bit difficult to be trading in front of the news. The short squeeze obviously played out. No first bounce, no interest actually in trading gold whatsoever today. But again, a nice reversal pattern coming out of our break in structure. Inside day traders are trapped. That was an obvious target that they would be heading right back up towards the high of the inside bar and potentially to the high of the week. We haven't quite got there yet. But if we do break that middle structure from yesterday and we get a measured move, who knows where gold will take us? Don't know. We'll have to see what happens. But an interesting week prior to Thanksgiving Thursday. I hope traders have had a great day because we had some perfect first red day trades, and after corresponding with some traders that just nailed those, hopefully everybody's going to enjoy a couple days to recharge. Not sure what Friday's trading will be like, but I have a feeling that the U.S. session may be quiet. Enjoy the next few days. Focus on mastering your process, identifying the best trade setups. Don't eat too much turkey. Have a great weekend, traders, and may the markets go with you.